G'day taxpayers. The monthly consumer price index data just released from the Bureau of Statistics confirming annual inflation at 2.4%, where it was last month. The trimmed mean, for what it's worth, 2.8%, up from 2.7% last month. But the confirmation is here that inflation is well entrenched in the RBA's 2 to 3% target range. And in fact, if we look at the headline figure, it's been between 2 and 3% for 9 consecutive months, so it's hardly a one-hit wonder. The trimmed mean is now been between 2 and 3% for 5 months. And the momentum that I think we're getting on the monthly increases and what drops out of the year-on-year run rate in the months ahead, and even from the quarterly data, because this is obviously another instalment for the June quarter data, it's looking like that inflation is comfortably, well and truly, easily within the RBA target band and hovering around that 2.5% once we get that run rate coming through in the next couple of months, the next couple of quarters. So for our friends at the RBA, inflation is not the issue for them anymore. It's under control, and if inflation was the only indicator they were looking at, they would have already have the cash rate near neutral at 3.25% or thereabouts. So they're still a good 50, 75 basis points away from where they should be. The RBA obviously now has to start looking at economic activity, which is pretty sluggish. Sure, next week we get the GDP numbers. They're likely to be sort of okay, 0.5-ish for the quarter, 1.75-ish annual. So growth really just sort of dithering along rather than recovering strongly. And the other thing that, of course, the RBA is going to look at is private sector activity and employment, both of which are slowing, both of which are weak, and both of which need a monetary policy kickstart to really see them contributing to growth in the year ahead. So for the here and now, good news, inflation under control. Let's move on to having policymakers managing economic growth, CapEx, and employment.